Hi, I'm Fred Ernest, President and CEO of Vista Gold. Vista Gold owns the Mount Todd Gold Project in the Northern Territory of Australia, one of Australia's largest and most advanced undeveloped gold projects. Presently, we report just shy of 7 million ounces of proven and probable reserves in a jurisdiction that is mining friendly and anxious to have the development of a new mine.
Fred can see as we spoke reasonably recently, but I'll tell you what I've done since I last saw you. I was in Quebec City last week with a whole bunch of the great and the good, and I thought the interesting standout companies are the ones that had adapted to market conditions. Reviewed the business plan and come at it differently. I'm putting you in that category, so I'm ringing to kind of catch up, see where you're at. Seen a bit of news out this morning, obviously, with regards to royalty regimes, and maybe give us an update on how things are moving.
Yeah, adapting and being flexible is a really important element in our business right now. The audience will know that a couple of years ago we announced the results of a feasibility study for a 50,000 ton per day operation, and hoping that would generate the interest in getting a partner to develop the project at that scale. Inflation came along. We're always very confident that we have a robust project. Early this year, we undertook the exercise to update our costs to incorporate the impacts of inflation, and really at the end of the day, we demonstrated that we still have a very viable project. But we recognize that one of the obstacles to finding a partner is it's really a handful of companies that can write, $1 billion checks to build a large project that can produce almost 500,000 ounces of gold per year. And so we have been laying the groundwork for an evaluation of a smaller scale project. A year ago, we announced the results of an internal scoping level study. We have earlier this year commenced a small drilling program to confirm some resources on the northern end of the project, do a little bit of met testing, and then right now we're entering the second phase of that drill program, which is going to test an area that we think might have host the opportunity for a little better grade starter pit. And then later this year, we plan to commence a feasibility study to evaluate a smaller scale project. The previous work we've done indicated that a 15,000 ton per day operation would have a capex less than $350 million. That's considerable savings. It would produce something on the order of 150 to 200,000 ounces of gold per year at that scale for 40 years. And so, that's still a pretty respectable mine. And so we've tried to adapt, recognizing that, the market is a dynamic thing, and that we need to be flexible, and that we need to be prepared to strike when the iron is hot. And so we want to have different options in front of us when that moment comes.
Well, it's really interesting, actually, recognizing the fact that there's not a lot of money around, and there's a lot of competition for that money when it is. So a billion bucks capex down to 350 puts you, I guess, into a bigger kind of capital pool, available capital available to you anyway. And 150 to 200,000 ounces a year is, I think by anyone's standards, it's still good. So don't worry about it. You've got the ability to kind of ramp up when you need to. But the question I think people will still be asking you is, you're still 60 million market cap company. You're still gonna, and I know you got cash in the bank, but you're going to need to raise a bit more money to kind of advance this kind of scoping study phase. So where are you with that?
So you'll recall that last December we announced that we'd entered into a royalty agreement with Wheaton Precious Metals. To date, we've received half of the $20 million. We're due to receive the last tranche of $10 million at the end of this month. So certainly with the 11.9 million that we had at the end of the second quarter, an additional 10 million, we've got the money, or we'll have the money that we need to have the staying power to see this through, to complete the studies that we need to do. The bigger picture when it comes to, how do you finance a project that's even 350 million? Well, certainly that's more within reach. And we hope that as we complete the smaller scale study, demonstrate that there's a lower CapEx alternative that people will begin to appreciate that, the value of the deposit can be unlocked in one of a number of different ways. And certainly doing it with a smaller scale, potentially expandable project is something that's more within reach. And, Doug Tobler, our CFO, is continually in touch with people on how we might finance a smaller scale project if we were to decide to build it on our own. There's still the option of having a partner is wide open, and perhaps even more attractive at a smaller scale because there's a larger group of companies that could be partners on a smaller scale project.
Right. So, but whichever route you choose to go down, and I guess both are still very, much firmly on the table. And you can talk to me about, the process in a second, but you're gonna need to deliver a number of components, in terms of environmental and so forth, and permissions, etc. So, in terms of the things that you have done to date, which kind of move you towards being able to make that decision and actually making it a reality, whether on your own or whether with a strategic, what have you done to date, and what's left on the list to do?
Yeah, so I think one of the big things that's already done is that all of the major environmental permits for the development of the project are in place. The EIS for the large-scale project was approved, and to modify that for a smaller-scale project is simply a matter of sending the agency a letter saying that we intend to build a smaller-scale project. We also have a federal environmental authorization that's been granted. That's another big check in the box, or what we would call a mine operating permit. In Australia, it's called the Mining Management Plan, has been approved for the large scale project. And so again, that's a matter of a letter to the agency saying we're proceeding with a smaller project. So those long lead time items have already been done. We've engaged in some discussions with, there's a fund in Australia called the Northern Australia Infrastructure Fund. It's a government funded development fund. And recently they've indicated that mining qualifies under the guidelines of the fund. And so that's one source of potential funding that we could tap into. We've done a lot of work on the social aspects of the project. We have a very strong relationship with the Jawoyn Aboriginal people who own all of the land in the project area. We have a contract with them, and ultimately they will benefit economically from the development of the project. They originally held a 10% participating right, and a couple of years ago we converted that to a sliding scale royalty. They'll receive between 2.125% and 3% of gross proceeds, depending on the price of gold and foreign exchange rate. We work closely with the local government and the other stakeholders. And so I think that, Matt, that we've been laying the groundwork, that we've been assuring that there's a firm foundation to build off of, that we enjoy the support in the community that we need, that we have the authorizations. And now it's a matter of, deciding what is the appropriate scale and what's the appropriate mechanism. And those things will fall together at the right time.
Do you feel under any pressure in terms of trying to have to spend like more money in the ground in terms of more drilling just to kind of sort of optimize this smaller scale project? Or is it really a case initially of saying, look, we know how to get this funded, we know how to get this built, we know how to get into production and sell, our product into market, because clearly, ultimately, you want to, deliver the larger scale project, but the kind of capital constraints at the moment in the market, have said to you, well, let's just think about this differently. So, just the here and now, in terms of that burn, in terms of the additional deliverables to kind of get this thing over the line, how do you view that?
Because of the immense amount of work that's already been done on the project, we've drilled over 65,000 meters of drilling at Mount Todd. We have a really good idea of what's going on. But as we look to the north into the deposit, which is where we think there's this potential for a little better grade starter pit, it's obviously a little lower stripping. We want to make sure the metallurgy is right. So we're just trying to tick boxes, make sure that there's no surprises. We're going to spend about between $2 and $2.2 million on the drilling program, because of all of the met testing that's been done in the past, and all of the work that was done for the feasibility study on a large scale. Really, the work that we're looking at is just a little bit of confirmatory met testing, and then we'll use the same process flow sheet, but at a different scale. So we've got some process engineering to do. Obviously, mine planning and mine scheduling needs to be done at a smaller scale. But the feasibility study will probably only cost us something on the order of 1.4, 1.5 million. So, out of the cash that we have on hand, we're looking at spending something on the order of $3.5 million to get to the point that we have a feasibility study at a smaller scale. And so I think it's a pretty efficient use of proceeds, use of cash, to get to the point that we have another extremely viable option in our toolbox that we can continually evaluate and use in our decision-making process.
Right. And if you look at obviously where the project is, great jurisdiction for mining. I think that's accepted. Fraser Institute might have something to say about it, but more importantly, I think the funding or banking community understand that too. So with regards to those conversations around strategics, or whether it's you decide to maybe look in this high price gold environment to potentially, you could do it yourselves. What are the things that either of those routes will require you to understand about the ability to do business and do business quickly in country, in terms of get this thing built before market conditions change?
Well, certainly a smaller scale project is easier to build. The equipment lead times are shorter. One of the things that we've done as we completed the scoping level study on a smaller scale project a year ago was that we visited a number of gold projects in Western Australia. You'll appreciate that designing a 50,000 ton per day operation, that you're trying to attract the likes of one of the top 5 gold producers in the world to be your partner on, that the design criteria and the standards to which you design the project is something similar to what they would use. And so it's quite high. As we visited smaller gold projects in Western Australia, we saw that there's a different standard. Internally, we jokingly call it Aussie rules, but quite honestly, a better term would be fit for purpose. Smaller scale projects don't need to be built with all of the concrete retaining walls. We can use things like gabions. We can use a lot more structural steel because we've got smaller crushers and smaller ball mills. We don't need all of the expensive parts of the construction that you would have in a larger scale project. And so that has the advantage of reducing the CapEx, but it also means that you can be much more agile and that you can construct more quickly. In fact, it even opens the door to, one of the common practices in Western Australia is buying used gold plants that are already built and operating someplace else. They just swoop in and dismantle it and pick it up and move it. That may not work for Mount Todd because of the flow sheet and our choice to use things like HPGR crushers and ore sorting that are not traditional parts of older Western Australia gold plants. But nonetheless, we've looked at, just in the design and construction, offshore fabrication, being able to bring in all of the structural steel already fabricated, ready to assemble, and just, erect it and be ready to move forward. So there's a lot of this sort of thinking that's going on behind the scenes as far as, looking at a smaller project, something that's easier to build, less engineering, shorter lead times, and a quicker construction period. And in addition, we have made the decision on a smaller scale project to use contract mining. And so that reduces some of the risk to us as the owner, that, there'd be another entity that would provide the equipment and the workforce there. We've done the same thing with the power generation, to have a third party power provider instead of us owning and operating a power plant, to have another company. And there's 3 in Australia that this is their business model. They They build and own and operate power plants to supply power to mine sites across Australia. So there's a lot of this kind of thinking that's going on in the background right now.
Yeah, and just to continuing on from that, when look, I'm sure if you had an announcement about a strategic coming on board, you'd have mentioned it or press released it. So, but those conversations, I assume, are going on in the background. So, let me ask you this about those conversations: what is it that they look for? Because if I look at this is a 1 gram per ton project over a very long period of time. It's a very it's an efficient earth moving exercise to extract value from the ground. Nothing wrong with that. Fantastic, but retail investors and some investors get excited about high grade. Others, maybe they're looking at other things. So maybe they're looking at the IRRs. I noticed that you've done some of the stats in your press release around $1,500 US gold, giving you just over 20% after tax IRR at today's prices, which extra $900 on top. I guess that looks extremely attractive. What's important in those conversations for these strategics? Is it your ability to get the thing built properly, or is it about returns, or is it about the type of project?
Obviously the gateway for these conversations is the size of the project, where it's located. Safe jurisdictions are becoming more and more a priority for strategic partners. They look at, what's the estimated cost of production? How does it compare to their portfolios? There's some that look at grade, but really it's production capability. I mean, when we look across the face of the globe, most producers are producing gold from ore that has a lower grade than they had 5 years ago. And so grade of deposits is becoming less important. Really, it's about the understanding of the deposit. We get a fair amount of scrutiny right off the bat with regards to our resource model, and we have received, in all instances, high marks for the methodology that we've used, the kind of conservative approach that we've taken to our modeling. Then they start getting into things like economics. What is the longer term? You made reference to the fact that we've used a feasibility study cash flow price of $1,800. And with that we have a $1.13 billion NPV5 and a 20.4% IRR. At today's gold price and 67-cent foreign exchange rate, that number becomes $2.3 billion, and the internal rate of return is 33.7%. Those numbers all tick boxes. And then kind of the next questions we start getting are, around the social issues. How's your relationship with the local community, the landowners? Where are you at with permitting? And so we're in a sweet spot where we have size, with 7 million ounces of reserves, 9.4 million ounces of total resource, 1,500 kilometer exploration package that we think has the potential to host at least a couple more deposits. There's a lot of things that work in our favor. And unfortunately, the pendulum has swung so far to one side right now that most of the M&A activity that's happening in the gold sector is amongst producers. Is one producer acquiring another producer to become a bigger fish than they already are. And at some point, a very interesting article that showed up in the last week saying, that people are having a hard time replacing gold reserves. Surprise, surprise. At some point, we believe that this pendulum has got to start swinging back the other way, and that some of the producers are going to have to start looking for development stage projects and take on what they perceive to be a little bit more risk. And certainly it's more time in developing projects rather than being able to do something like the Newmont-Newcrest acquisition combination, where, one day you're producing, 7 million ounces a year, and the next day you're producing 9 million ounces because you've combined with somebody else. Those deals can't last forever. And so we're trying to be positioned so that we're the most attractive girl at the dance when that time comes.
Yeah, I think there's a lot of conversation around that. Obviously, we saw BHP's failed acquisition of Anglo, and but that again, it continues to be that merger of equals rather than getting after and finding new material, but which perhaps the big boys aren't equipped to do as efficiently as juniors. But then there's not so much money around for juniors to do that either. So it's a tough gig out there for sure for mining, and perhaps we need a bigger conversation about how to kind of fix it, because it kind of feels a little bit broken at the moment. So like you're a small company with a massive, very attractive asset and good returns, and as you kind of listed, a lot of things that the funders will find interesting in this. What are the things that perhaps we need to be aware of in terms of the kind of red flags which may kind of creep up and change attitudes out there at the moment? I mean,
red flags. We don't view that there's very many of them. I mean, you mentioned that we're a small company with a large project, and it's not, the value of it isn't recognized. We think that part of the reason that value isn't recognized is because there is no clear path to financing, and there's concern about dilution and where that money is going to come from. I think that what people need to understand is that we are not going to go out and build $1 billion project on our own. That's not in the cards. The way that a project of that scale will be built is with a partner. The smaller scale project will give us a really good view of what would be required to build the project at a smaller scale, and certainly allow us to evaluate whether that's viable, something we could do ourselves, or if it simply opens the door for a bigger suite of prospective partners who are more able to finance their share of a smaller project. As I mentioned, we already have the environmental permits. There's no red flags there. There's no concerns there. Our relationship with the government's desire to have mining in the Northern Territory is as strong as ever. We just released news this morning that indicated that July 1, there's a new royalty regime that's going to go into effect that is going to change things in the Northern Territory in a way that's favorable for the industry. Previously, we've had a net profits-based royalty, and that's being switched over to an ad valorem tax structure. And previously, the feasibility study the updated feasibility we announced earlier this year, the effective ad valorem rate using the old system was just shy of 7%. The new royalty regime that we'll fall under will pay a 3.5% ad valorem tax, and so that cuts our royalty obligations in half, and that's very meaningful, and that's just very indicative of the Northern Territory government's commitment to having a viable mining industry. So from a government relations point of view, I don't see concerns there. Our relationship with the Jawoyn people is as strong as ever. It's really the questions center around funding and how we move forward with the development of the project. And we hope that with the completion of a smaller scale feasibility study, approximately a year from now, that we're going to be in position to really answer that question.
Okay, so we should say, but in the meantime, you're moving forwards on all fronts. They've got to come to the markets a little bit. Obviously, with a New York listing and a TSX listing, do those markets behave and react differently to news? I guess the Canadians understand Australia quite well. There's a lot of TSX and TSXV companies operating in Western Australia. The US market, love gold. Do they understand Australia?
That's a very interesting question, Matt. We're a British Columbia corporation, and yet about 92% of our shares are held by US investors and 8% are held by Canadian investors, and that's pretty well reflected in the trading that we see on a monthly basis. As far as understanding Australia, I think that the Canadian investors find Australia similar to Canada in many regards. However, there are some very profound differences in the way things happen in both countries. I think that the U.S. investor looks at it as, it's another safe jurisdiction, and we're not concerned about Australia as a place. That I think that the North American investor is probably more interested, or they place more trust in the management team to say, we can manage the risk in Australia, we can work within the framework of being in Australia, and that the North American, the U.S. investor is probably more anxious about let's get it built and let's start getting cash flow. Although there's whereas the Canadian investor may be just a little bit more, this is an option on gold. I think we see people in both camps. I certainly hear more from U.S. investors that asking the question, when are we going to get started? But I also know that there's people who subscribe to Rick Rule's thought process. That you look at Vista's annual cash burn, something on the order of $6 million a year, maybe a bit more. On 7 million ounces. If you just think about it in one sense, that's $1 a year per ounce of reserve option on gold in the ground. And if you believe that gold is going to go higher, why would you spend the money to develop it today if you think that there's going to be a higher price that you can develop it at in the future? And so we deal with both sides of this market, and it's a very interesting and very dynamic marketplace that we work in. That we have a lot of different people who invest in gold generally and in Vista Gold for different reasons, and we're trying to be that potential source of creation of tremendous wealth for all of them.
I guess what they all got in common is they like a big project, a big resource and reserve too. So which you deliver for sure. And just finish. I'll finish off with the question which you are asked. You said is when's this thing getting run? If all things being equal, you were able to get your strategic partner. We know you're permitted, etc. How quickly does this thing move into production once you sort of make that financial investment decision?
With the announcement that we have a strategic partner and that a transaction has been completed, I expect that the new partner will probably want to spend a year on their own, detailed engineering and those sort of analyses. Engineers tell us that the Mount Todd project and large scale could be built in 18 months. We've allowed for a 2-year period to construct and be in commissioning. A smaller scale project, that probably becomes something more on the order of 12 to 18 months. So it's, the advantage that we enjoy, and you can see it in the picture behind me on the wall here. Mount Todd is a brownfield site, was operated once before. We enjoy tremendous infrastructure, paved roads to the mine site, the power line already there that provides power for our current environmental obligations. That will provide construction power. There's the natural gas pipeline. You see the tailing storage facility just above my head. That has capacity for the smaller scale for the first 18 years of the project. There's things that make this so that this can be built very quickly without the traditional risk of developing infrastructure that many operations face. So it's very positive.
Very interesting indeed. I'm gonna let you go. I'm definitely watching you. Want to see this thing move through the phases. It's got a lot of very positive attributes. So appreciate your time today. Thank you.
Thank you, Matt.